You think this time is different. You think your fiber optic cables, your terabytes of data, your algorithmic trading bots, and the constant stream of news piped directly into your pocket gives you an advantage my generation could only dream of. You are fatally mistaken. The devices have changed, but the man operating them has not. You are the same fool who crowded the bucket shops in 1901, the same hopeful amateur who bought Union Pacific at the top in 1907, the same desperate gambler who was wiped out in 1929. The only difference is that technology has given you a faster, more efficient way to lose your money. The game hasn't changed because the player, man, is the same emotional, predictable creature he has always been. Wall Street and every market that has ever existed is nothing more than a grand stage for the oldest of human dramas. It is a battleground of hope, greed, ignorance, and fear. And these forces are timeless. They are eternal. There is nothing new on Wall Street. There can't be, because speculation is as old as the hills. Whatever happens in the stock market today has happened before and will happen again. The particulars change, the name of the stock, the industry, the economic backdrop, but the pattern, the pure human reaction to price movement, is identical. I learned this lesson over and over, and each time it cost me a fortune. You think you are immune, but you are not. The lessons I paid for in millions of dollars are written down for you to read. They are in the book, Reminiscences of a Stock Operator. If you have any serious intention of surviving in this business, you will get the book through the link in the description of this video, and you will study it not as a history, but as a blueprint for the present and a warning for your future. Do not think of it as a story about me. Think of it as a story about you 100 years before you were born. Let me tell you about a man named Percy Thomas. He was a brilliant cotton man, respected, intelligent, and enormously persuasive. He was my friend. He came to me with a proposition in cotton. He had a theory, backed by what he believed was unassailable logic and inside connections, that cotton was going to new highs. He wasn't a common tipster. He was an expert, a man of substance. And he was so utterly convinced, so full of that dangerous, infectious hope, that he managed to do what the ticker tape itself never could. He made me abandon my own judgment. I was bearish on cotton. My system, the one I had built over years of ruinous mistakes and hard-won successes, told me the line of least resistance was down. The tape was speaking a clear language. But Percy Thomas spoke a more seductive one. He spoke the language of friendship, of certainty, of the sure thing. He appealed to my vanity, my greed, and my desire to believe in a narrative over the cold, hard facts of price and volume. I listened to him. I ignored my own rules. I bought cotton when I should have been selling it. I held it as it went against me, listening to his reassurances, his explanations, his unwavering hope that the market would soon see things his way. I lost millions. It wasn't the market that beat me. It wasn't bad luck. It was Percy Thomas. But not in the way you think. He didn't swindle me. He was as honest in his belief as he was wrong in his facts. The true culprit was my own human nature. I allowed another man's personality and his story to overrule my own cold, disciplined reading of the market. I fell for the oldest trick in the book. I wanted to believe. Now look around you. Who is your Percy Thomas? Is it the charismatic CEO on television promising a revolution? Is it the anonymous analyst in an online forum with a 20-page due diligence report filled with hope and confirmation bias? Is it the financial news anchor breathlessly reporting on a new paradigm? The names and faces change, but Percy Thomas is everywhere. He is a permanent fixture of the financial world because he represents the siren song of hope and easy money, and men will always, always want to believe in that song. You will be tempted, just as I was, to listen to a compelling story instead of the anonymous, emotionless verdict of the tape. And when you do, You will pay for it just as I did. The form of the temptation has evolved from a private conversation in a boardroom to a viral tweet, but the fundamental human weakness it exploits is precisely the same. The public, the great mass of traders you so condescendingly call retail, is the other great constant in this game. They are always there, and they are always the same. The public is not a villain. It is a force of nature, like a tide, governed by the immutable laws of emotion. In a bull market, they are driven by greed. They rush in at the end of a long advance, buying stocks not because they are sound investments, but because they have been going up. Their only reason for buying is the other fellow's reason. The price is higher than it was yesterday. They buy at the top. They provide the liquidity for the wise men who bought low to sell high. They are the essential last cog in the machine of a bull market. In a bear market, the public is governed by fear. They hold on to their losing positions, paralyzed by hope, convinced that every small rally is the beginning of a recovery. They refuse to take a small, manageable loss, and so they are forced to take a catastrophic one. They finally sell not when it is prudent, but when they can no longer stand the pain. They sell at the bottom, dumping their shares into the hands of the same wise men who are now accumulating for the next advance. Their capitulation marks the end of the decline. Does this sound familiar? Does it not describe the mania in technology stocks in 1999, the panic of 2008, or the frenzy around whatever speculative bauble is currently capturing the public's imagination? The patterns are identical because the emotions are identical. The public is always looking for a shortcut. They want to be told what to do. They crave tips. They want to get rich quick without the tedious, soul-crushing work of study and discipline. This is a permanent feature of human nature and therefore a permanent feature of the market. The successful speculator does not mock the public, he studies them. He understands that their predictable emotional reactions create the very opportunities from which great fortunes are made. He is not swept up in their greed, nor does he succumb to their panic. He stands apart, watching the drama unfold, knowing that he has seen this play before and knows how it will end. This is why the study of history is paramount. Not financial history in the academic sense, not memorizing dates and interest rates, but the history of speculative manias and panics. Read about the South Sea bubble. Read about the tulip mania. Read about the panics of the 19th century. In them, you will see the present day reflected in perfect clarity. You will see the same arguments used to justify insane valuations, the same promises of a new era that renders old rules obsolete, the same blind greed, and the same terrified stampede for the exits when the illusion shatters. When I anticipated the Great Panic of 1907, I did not have a crystal ball. I had history books. I saw the unmistakable signs of overextended credit and rampant speculation. I saw the money supply tightening. I knew from studying past panics that when the foundation of credit begins to crumble, the entire structure is doomed. I wasn't betting against America. I was betting on the certainty of human nature. I knew that when the pressure became too great, fear would replace greed, and men would sell whatever they could at any price to get to safety, and so it came to pass, exactly as it had before and exactly as it will again. Your charts and your indicators are merely tools, they are maps of the recent past. But the study of speculative history is the study of the landscape itself. It teaches you to recognize the signs of a blow-off top, when the public is clamoring to buy and the professionals are quietly distributing their lines. It teaches you to recognize the anatomy of a panic, the cascading margin calls, the forced liquidations, the final gut-wrenching washout that signals a bottom. These events are not black swans. They are recurring seasons in the market, as predictable as winter following autumn. Technology has not abolished the business cycle, nor has it abolished the emotional cycle of the speculator. The enemies you must fight are not in the skyscrapers of Wall Street or in the code of a high-frequency trading firm. The enemies are ancient and they live inside your own skull. Their names are hope, fear, greed, and ignorance. Ignorance can be cured with study, but hope, fear, and greed are part of the human condition. You cannot eliminate them, but you must learn to master them. When you are in a losing trade, hope is your deadliest foe. It will whisper in your ear that the stock will come back, that your analysis was right and the market is wrong, that you just need to be patient. Hope will turn a small, healthy loss into a devastating one. It is the emotion that makes a man average down, the most fatal of all mistakes. When you are in a winning trade, fear is the enemy. It will tell you to snatch a small profit before it disappears. Fear of losing your paper gains will make you sell a stock that is on its way to a major move, cutting short the very trades that are meant to pay for all your small losses. You will sell far too soon, while the man who has mastered his emotions, the man who has the courage to sit tight, will ride the trend to its logical conclusion and make the real money. And greed? Greed is the great destroyer. It will compel you to overtrade, to take risks you cannot afford, to pyramid your positions improperly, to chase the last eighth of a point at the top of a move. Greed makes you want to be in the market all the time, even when conditions are unfavorable. It denies you the wisdom of holding cash and waiting patiently for the perfect setup. Greed, fueled by a string of successes, leads to overconfidence and the violation of every sound rule you have ever learned. It convinces you that the game is easy, right before it teaches you, once again, that it is the hardest game in the world. These are not modern psychological insights. These are the same battles that traders have fought since the first stock was exchanged. The brokers' offices of today, with their glowing screens and silent typing traders, are no different from the cacophonous brokerage houses of my day, with boys scrambling to post prices on a chalkboard and the ticker clattering in the corner. In both places, you will find men whose faces are pale with fear as they watch their capital evaporate. In both places, you will find men whose eyes glitter with greed as they watch a stock go parabolic. The technology is irrelevant. The human drama is the constant. Therefore, you must accept this fundamental truth. You are not navigating a world of numbers and charts. You are navigating a world of human emotion. You are not trading stocks. You are trading against the weaknesses of human nature, and you must be ever vigilant that you do not fall prey to your own. The market is not logical. It is psychological. It is a beast that is driven by the stampeding herd, and your job is not to reason with the herd, but to anticipate its movements. The rule is this: stop looking for the new thing. The secret to this game is not in finding a new indicator, a faster data feed, or a more complex algorithm. That is a fool's errand, a search for a holy grail that does not exist. The true secret is in understanding that which never changes, human nature itself. The patterns of greed and fear are etched into every market chart, from the tulip bulbs of the 1600s to the digital tokens of today. Study the past. Study the great booms and the great panics. Study them until their rhythm becomes a part of you. Recognize that every headline, every earnings report, every government announcement is filtered through the same flawed, emotional prism of human perception. Your work is not to decipher the news. Your work is to decipher the human reaction to the news. The game is not about being smarter than the next man. It is about being more disciplined and more emotionally controlled than the next man. Master the eternal principles of human folly, starting with your own. Recognize the Percy Thomas in your life. See the public's greed and fear for what it is: a signal. Understand that every day the same old drama plays out with a new cast of stocks. Master this one great truth, and you will have an edge that time can never erode. Fail to learn it, and you are doomed to repeat the mistakes of all the speculators who came before you, becoming just another forgotten lesson in the immutable history of Wall Street.